While Thursday price action wasn't much about economic data, it was a day of consequence as market participants were reminded of some of the traditional overhangs in the global economy, with a specific reference to the impact of rising U.S. yields as the Fed moves further into its policy normalization. The jarring run-up in U.S. yields that succeeded in jogging investor memory late Wednesday has resulted in downside pressure in U.S. equities from record high levels, and the fact that the pullback in stocks has coincided with the run in Treasury yields should not be taken lightly, as it suggests the market is worrying a lot more about equity market valuations that can no longer be easily justified as the cost of borrowing returns to the realm of normal. While all of this has inspired additional demand in the US dollar, we're not as confident the US dollar will be wanting to run much higher. On top of the dollar bearish implications from US trade policy, we also think there hasn't been nearly enough attention on the intense downside risks associated with US dollar appreciation in a less stable backdrop. Dollar appreciation is a big strain on emerging market economies that are already struggling to manage their debt exposures, and the prospect of another big move up in the greenback could be a prospect that leads to a collapse in the emerging markets. Clearly, there is systemic risk associated with such an event, and it's not something the global economy will want to see. So while we believe there is still unsettled business around the corner that has been waiting to sort itself out after a decade of unprecedented accommodation and stimulus, we think it will manifest more on the stock market side, while the dollar will be less inclined to absorb traditional safe haven bids. The dollar will hold up better against the risk-correlated currencies, but we suspect will not fare as well against the other major currencies. As far as Friday's calendar goes, key standouts come in the form of Aussie retail sales, German factory orders and producer prices, Swiss CPI, Canada employment, and the always closely watched U.S. jobs report. That's all for now.